Here with Yoann Turpin, co-founder of Wintermute. How's it going?
I'm good, thank you. Thanks for inviting us.
Good. You want to give just a brief overview of what Wintermute's doing, what you guys are?
Yeah, so Wintermute is essentially a market maker.
Okay.
So we're there to provide prices when people want to buy or sell cryptos across the space.
Okay.
You could put us in the high frequency space because we very much trade 4, 5, 6 million times a day.
Okay.
We cover 70 venues per se. So 70 venues, that means we trade on 30 centralized exchanges and 40 protocols. And we also have people who plug into us, like the CFD providers or the robo-advisors. So when you trade cryptos through robo-advisors, you probably trade against us as well.
So odds are a lot of our viewers have probably actually traded with you guys, not knowing it at one point or another.
You're correct. Yeah.
Cool.
So very likely. So on the CeFi side, we do, well, across the spot space, we do 7 to 13% of the spot market.
Wow. So personally, how were you first exposed to cryptocurrency? Was it Bitcoin or Ethereum? And when you were first exposed, did you jump right in or did you just kind of walk away for a few years? I know I kind of did that.
No, so my context is, this is my fourth venture and that's the first venture in the crypto space.
Okay.
I was a derivatives trader in the interest rate space, which means
so what's a derivative? Can you kind of?
A derivative is a product that's derived from the underlyings, and the underlying could be like a house, it could be a bond.
So like
could be a
future
stock.
would be a futures markets. That's a derivative.
That's already a derivative.
And then maybe options.
Options derivatives.
Cool.
So all of these are derivatives because you have an initial asset that you basically take a bet on against someone else. So future market, if you just buy a Bitcoin future, you don't actually buy a Bitcoin, you bet against someone else who thinks that it's going to go down and you think it's going to go up.
Okay.
So that's typically derivative. So options is the same. It's basically an agreement you have with someone else, and then you'll check it's a derivative of something because that something is going to change in value, and you're taking a bet on that change of value.
Cool.
So,
yeah, I think I distract you from your story.
No,
when you first got into crypto, when was that? Or
it's okay. It's a fair question. So, the context is basically I was trading derivatives as my first venture. So I was essentially building, a hedge fund and a family office.
Okay.
And I was listening to central bankers all day to run that trading activity. So we're trading on rates, and we're trading in like the longer term rates, both in Europe and the US. And because I was listening to the central bankers,
like the federal overnight rates or something here in the US?
It's longer term. It's more like 2, 5, 10, 30 years in the US. So
okay,
treasuries and the US bonds and so on.
Yeah. All right.
So through that, you listen to central bankers, and basically they tell you that cryptos is BTC is crap, and then that fiat is king, and then basically just sort of like it was a bit more cautious about Bitcoin adoption. Even though we looked at MTGOX in 2012, essentially.
Yeah.
2012-13.
That's pre-crash, obviously.
That was an interesting time. What made me reluctant to go there was that my first venture, we could literally make or lose 5 million euros overnight. And when we looked at MTGOX, it would take 3 weeks to take $30,000 out of MTGOX. We're like,
oh my gosh,
it doesn't really look like a scalable business.
Yeah, the UX wasn't there, huh?
No, so that was the first time. The second time is, on my second venture, I was co-building more of a startup studio between the UK and India. And we came across a lot of teams that actually were quite interested in blockchain. But we sort of discarded that in 2000. That was more 2015.
Okay.
And then 2017, the big thing for me was maybe it just needed a bit more validation. With 2017, I was building another business with a family office, and I was sitting next to a former hedge fund manager that I regarded quite highly, and we reviewed about 56 ICOs together. One of them being it was, don't remember which one exactly. The Block One team. It's
Block One team. I'm not sure which one that was. Is it a good story or a sad story?
No,
where the ICO was going?
no. It came back to me. I think maybe I wanted to forget about it. So it's EOS actually. It's EOS.
Oh yeah.
That's
Okay.
probably
So
why
kind
I
of a
forgot
sad
about
story.
But from an investment perspective, I think we got into like about 37 cents, and it sold like up to like $24 or something.
Yeah, it did really well. You said 2017.
Yeah. So
Yeah, that was its jam that year.
Yeah. So as part of these 56 picks, I think EOS, we're taking much more of a venture approach, and basically like it took like maybe 30 or 40% of the overall AUM at the time. So conclusion of that is that it generated enough interest for me to reconnect with ex-colleagues from Optiva. So that when I was in trading, basically I used to trade at Optiva, and Yevgeny and Haro, where ex-colleagues from over there. So they are my co-founders at Wintermute, and I had through that friend from the hedge fund industry who reviewed the 56 ICOs together. He basically wanted to allocate a crypto sleeve of a macro hedge fund to me. And basically that generated enough interest for me to reconnect with Yevgeny, and then basically Yevgeny had set up Wintermute.
So you kind of made your way to crypto through the traditional finance, and then is that kind of your journey there? That's how you were exposed to it, and then you actually brought crypto back into traditional finance with that hedge fund?
Yeah. So I would say it's a bit more layered.
Okay.
Because my second and third ventures were more venture driven. They were much more around helping startups and doing qualitative things with startups. I found cryptos really nice in terms of being at this intersection of like what I could do in trading from the quant side, and what could do qualitative size of essentially having very early stage projects being listed, in pre-markets as such, so through the crypto space. So I found crypto was just a really nice intersection of like qualitative aspects of startups and quantitative aspect of trading.
Cool. So this whole journey you had, is there a high and a low, a rose and a thorn in this journey?
So at the personal level, it was very much had a big low after my first venture. So I was there to build a company, and then basically the investors were more there to just allocate funds. So it was so I pretty much lost a year in a non-compete to basically just be able to walk away from the firm. We did make some money of it, so I had some house money, but not retirement money per se.
Yeah.
And they gave me a platform to actually be pretty much an investor or an angel investor full time, and build enough of a network to actually. And it's a bit of a segue to Wintermute, but it's actually the first few rounds, and that was a tough time as well for Wintermute when we did the first few rounds during crypto winter. So we closed the first round officially in September 2018.
Okay.
And then it took me a long time to find the money.
Yeah, can imagine.
And strangely enough, the money came not from people who understood trading and hedge funds, but actually from people from the startup world.
Okay.
So people who are just much more, adept to risk as such.
So your thorn there kind of turned into the rose, right? With you. Yeah. Awesome. I think that's a good segue to Wintermute itself. What can you touched on it earlier, but can you kind of get into the grainy bits? What are you guys working on right now? Are you expanding at all?
We're expanding quite a bit. We're hiring a good bit. There's two main things I would say, two main focuses. One is on the DeFi side, so we just want to be very, very present and just be ready for what I like to call the DeFi flip. So today, Wintermute is very much, if we trade $20 billion, 18 of that will be in CeFi, 1 will be purely OTC, and 1 will be purely in DeFi.
Okay.
So it's only 5% of our volumes really. But what we're getting ready for is just to have a ton more, volume. So people like 1inch and so on, we're just getting ready for a ton more volume to happen in decentralized finance. So we cover 9 chains and we cover 40 protocols in DeFi.
Wow.
So that's one of the things, but we also cover the institutional side. So we also have a part of the business that's essentially about building a platform for people to be able to, so through APIs to plug into us, or through even a GUI on top of our APIs, to launch, node and permissionless. And it's very much, us helping people to trade directly with us. regardless of them wanting to plug into us, through an API or just simply using a GUI.
Yeah, I guess you guys would have a lot of experience kind of working with both institutions, centralized exchange, and then DeFi itself, right? Yeah, seems like a cool product niche for you.
Yeah, so we're trying to define what the price is of any asset. And at this stage, it still happens more on the centralized side because there's a bit more volume, there's a bit more capital efficiency and so on. And it just propagates to DeFi. And because the main thing about DeFi is that it's AMMs and the automated market makers per se are meant to be armed. So basically there's a price discrepancy and then we're meant to put it in line.
Okay.
So typically UniV3 we do about 50% of the volumes there.
Really?
Yes.
50% of UniV3's volume. Okay, very cool. So
it needs to be put in place essentially.
So it seems like you're doing like a bunch, or you guys have done a bunch kind of behind the scenes, kind of on the infrastructural level of DeFi, CeFi. I heard some whisperings of you guys actually launching your own DEX.
Yeah, so it's not really our own as such. We incubated.
So you partnered with them, or
okay? It's nearly a venture studio model. So there are some team members that have moved over.
This is Bebop.
Bebop, exactly.
Cool. Yeah.
And Bebop is a different take to price discovery in DeFi with a mix of it's a hybrid of, if you want, of more of a 1inch with a power swap. So it's more of a hybrid of how do we get more price discovery in DeFi?
Kind of aggregating, looking at multiple different liquidity sources instead of just one. If you buy a lot here, it might be better to break it up across multiple liquidity sources. Yeah.
Exactly, and the relationship is that we're not, as Wintermute, we're not invested yet, but we may invest in the future.
Okay.
And we're definitely helping the team in us being the first market maker there. And then we'll just, we'll make sure it's open for the market makers as well.
So is that platform going to be an AMM, an automated market maker, or?
No, it will be more around aggregation and requests for quote. So basically it's more about people pinging us.
I see.
So again, more price discovery on chain.
Cool. Yeah, sounds exciting. When is that going to be live, or?
So it's already live, but in beta.
Okay.
So during consensus, we actually gave some early access to people who were a bit confused with the booth because they had to take a PFP and create an NFT. And some people thought that the team was actually an NFT team, but it's not the case. The NFT was just there to help with just to get the line built up for the beta.
Okay. Was that right there at the entrance of the consensus? Yeah, okay, I saw you guys there. Yeah.
I think
it's a huge line.
We were sharing the booth with them, and I think they had a better spot than Wintermute. So
yeah.
Everyone would be coming from the food hall there.
Okay. Cool. And so you kind of touched on it earlier, but what's going to set Bebop apart from other decentralized exchanges? Is it the enhanced price discovery and stuff like that, or is there maybe UX is improved?
UX is improved. I would say, the right mix of, request for quote and in aggregation.
Okay.
We incubate them. But,
so request for quote RFQs that's heard a lot, but how is that actually used by people? How are they using RFQs? I've heard it. I don't really know what.
So you've heard it and you've probably used it.
Okay.
Do you have a MetaMask?
Yeah, I have MetaMask.
So if you ever use the swap function in MetaMask, you've used request for quote. So what it does is that you're saying you're going to swap, some ETH against USDC.
Yeah.
And it basically pings a mix of total. It pings 1inch as well.
Okay.
I believe so. It pings power swap and a few others. So basically what it does is it just request for quotes just means that you go through an API and you request a quote to swap ETH against USDC is basically what it says. If you got 100 ETH, how much USDC do I receive back from this? Okay,
because I guess even the volume of the trade could kind of change which quote's better, right?
Yes.
Yeah.
So what it does through MetaMask, for example, is it will actually just competitively just ask different platforms what their quote is for a certain swap.
Cool.
And then just exercises it on chain. So
yeah. So will that have its own API there, or is that?
Yes.
Cool. Anything else Wintermute's expanding into right now, or?
So we I mentioned the platform on the institutional side. I mentioned DeFi. There is more and more activity in two different things. We quite actively and we start to lead rounds as a not really. We're not a venture firm per se. We're a strategic investor, so we purely purely investing from the balance sheet. But we've made 87 investments, mostly around the DeFi ecosystem. So
are these really small projects you're investing in, or?
It's more and more seed super seed. It's been.
That's going to sound. I'm not that deep in that space. Can you break that down?
It means seed super seed. It means the first or the second round of fundraising.
Okay.
And that means typically teams which have 50 to 100 million of like fully diluted value or equity value.
Yeah.
We've made mostly investments in tokens. So about 60% of the investments are tokens.
Oh, okay.
20% are pure equity and 20% are equity plus a token warrant.
Cool. So you guys are going long on tokens there, huh?
Yeah, well, I mean, it makes sense. It doesn't mean that we can use those tokens for market making though, because they tend to be still vesting for quite a few years. But and it's always strategic. So it's always about, can we help the team to grow? And very, very often, so one of the first investments we made was in DYDX. And it was pretty obvious in that case, how could we help the team to grow?
I guess that goes back to the derivatives you were talking about earlier, because they're kind of a decentralized derivative platform, right? Yeah. Very cool.
They are. Yeah. So it's very much and it's all about us being aligned with more and more aligned with the teams, and then just I think what we don't mention enough about Wintermute is much more builders than traders, so much more of an infrastructure layer.
Okay.
So I'm not necessarily a massive fan of Google, but they tend to be a good example for this. So
yeah.
Google is a tech firm that makes money from advertising, and we're also a tech startup that happens to make money from trading.
Okay.
But what we do all day is build infrastructure, essentially.
Yeah. Very cool way to put it. Yeah, I understand it as a complete outsider to. Yeah. So thank you for that.
Cool.
Kind of moving on to just crypto in general. What does mass adoption look like to you in crypto? Have we hit it already? Is it in the future? Are we in this weird purgatory right now? What's going on? I know you're not Nostradamus, so we're not going to hold you to it, but I just want to hear your thoughts.
My thoughts is that if there's inefficiencies or so, there's and I'm the entrepreneur, the optimist as such.
That kind of goes back to something earlier. You were saying you guys do a lot of market making.
Yeah.
When I was first getting deep into DeFi in 2019, I noticed that the spread, so the bid-ask spread on certain assets on some decentralized exchanges were just insane. 10% bid-ask spread, and so it's like kind of a market maker. You guys would arbitrage that for me, right? So as a user, I get a better user experience across all dexes that you would touch. Yeah.
So a big part of our job is to make sure that programmatically, we essentially take liquidity from. So we get the best price, and we help with what's called price discovery. So it means that everyone or the whole market as a whole is trying to figure out what the 1-inch token is worth, what BTC is worth at any time, and you get buyers and sellers competing to just define what their price is. And what you need to do is between essentially centralized finance and decentralized finance, just to make sure to propagate and just to help, the price discovery that happens. Say, the price is there, and I don't know, on Binance or Kraken and so on, and then people, especially in DeFi, should just be able to get the same price as such, or maybe have the same price.
So you're helping towards that UX aspect of mass adoption. Then. Yeah.
So it's about making it more available for other people and having. It's actually interesting because the first Series A VCs so we have Lightspeed on the cap table, and Jeremy, who's more well known for investing in Snapchat, I think seed or so. But not necessarily Wintermute, but he put it very nicely. So he was saying that as Wintermute, we're just trying to make sure that basically when you buy cryptos, you don't get ripped off.
Okay.
Which is similar thing that what you were saying in DeFi, so saying you pay like a 10% spread that you shouldn't pay a 10% spread. So.
Yeah, I mean, I just found I was new user to DeFi. I found out after the fact that actually it's trading for this amount. You were overpaying by literally 10%, and so. Kind of a slap in the face for just getting into it. Yeah.
So the purpose of the market maker, I mean, it's TradFi or actually cryptos. Like the first main sort of theme that we had was very much around making markets more efficient. And then it turns into other things because so you're asking what else we're looking at. So we like alignment with teams quite long term, so we end up investing as well. And we also get more and more involved with governance as such. So
governance, huh?
Yeah.
All right, that's kind of up my alley. I do like community and governance at 1inch. What's your take on the DAO scene right now?
So
not the DAO, the Ethereum DAO, but just DAOs in general. You know,
so
I'm not talking about the 2016 blow up, but
no, not. It's on the DAO on governance and how to manage the DAO as such. I think there's challenges in terms of like. I mean, we've seen it as Wintermute, so we like to have a small team and quite involved, and having a bunch of workaholics being quite aligned. And I think at the DAO level, it's just, the decision making is still. I think people are still trying to figure out how to make the best decisions.
Yeah.
While including communities.
That's kind of what I've seen. It's hard to like take away the best ideas from just the ideas that have the most money behind them, because I mean, sometimes there's really good ideas and that person does not have $1 of tokens to get it out there, with this on-chain governance. So
so I think you have different views there. Some people actually stay away from the DAO structure until there's enough that's being built. Some people, I think it is Shapeshift, but some people have these structure of DAOs and sub-DAOs. So essentially, the community in general will actually define and vote for certain teams or certain group of people who should be in a better position to make decisions. So like
representative parliamentary structure, so representative of those people instead of every single person voting on where we're spending this $5,000. You have an expert there, maybe a grants expert or a treasury expert, treasury investment. Cool.
Yeah, so I think so the example of Shapeshift was about essentially, I think it's about $1 million or so that they've set more as nearly a venture, a bulk of money to just and if they have like 3 persons managing or this sub DAO, and that works quite well for them. So I think it's more about avoiding the downside of having to go to the DAO every time you have to pay one of your employees' salary.
Yeah, that's a good point. There's a lot of friction there, especially, I mean, we see these quorums with DAOs, so you have to have, sometimes it's like 10, or I've seen it as high as $80 million worth of tokens to even get a vote created. And it's like, you're not going to do that when you want to pay some employee $10,000 for the last month of work,
Yeah, it's I mean, but a lot of it can be perfectly legitimate as well. So I think it's just finding that balance and you're trying to find the right balance in terms of focus and decision making.
Yeah, I really like that sub-DAO kind of focused structure you touched on earlier. Gonna have to read up more on that one. Just take it back to kind of like the core of crypto. Where do you see the future of Bitcoin? Is it a payment rail, like the white paper mentioned, or is it more of a store of value like you hear from the community now?
Yeah, so for Bitcoin specifically, and the ETH is another
I'd like to hear your take on both of them.
So I think let's see how we've approached it as Wintermute, is that we obviously, in terms of so the point for us is just minimizing inefficiencies, and it's just through a better pricing and through essentially more what's called liquidity in the market. So liquidity means that whenever you want to buy $1 million equivalent of BTC, it costs you a lot less. You're not moving the price as much. So the more liquid it is, the least amount the price will move by.
Okay.
So it's very much that. So it's very liquid.
So you can kind of see that on Uniswap, right? With your, I think they call it the impact fee or price impact. That's what they call it. And you notice the jumps there, especially with Uniswap v3. You can buy. It's with bigger buys on smaller pools, but I mean, you could get, let's say, 20 tokens for $1,000. But then if you put in $2,000, you might only get 30 tokens, because you just moved it outside of the liquidity bound range.
Yeah, you get less tokens in that case. You pay more as such, but it's
more per token there.
Yeah, you pay more for token, exactly. So it's more, the more fluid that is, the more the crypto ecosystem can compete with the rest of the payment world.
Yeah.
That's for sure. In terms of BTC in itself, I'm waiting. I had seen and heard of like a lot of sort of DeFi for BTC. I'm still waiting to see. I mean, there's teams like Stacks and so on just working on.
We have DeFi for BTC. It's called wrapped Bitcoin.
It's exactly. Yeah, but
I'm probably going to get some hate mail for that.
Yeah,
one.
I think so. But my answer to that is that we've been as a startup, we've been quite focused on layer 2s. So even for Ethereum also, and just putting everything in the same bunch. But we think that the layer 1s are more the confirmation layers, and actually the trading layers are more on layer 2s, and with and layer 2s in general. So the scalable solutions that could be all the Polygon of the world, and all the bridges, but it could also be all the zero knowledge proofs as well.
So you as a market maker, Wintermute as a market maker, would they have to be bridging the gap between layer 2 and layer 1, maybe,
yes.
if they have to? Okay, so when we talk about this like layer 2 future where me as an end user is only on layer 2 because I don't want to spend $2,000 to move my $50 of Ether on layer 1,
yeah,
you guys would be batching that on the back end, right? Or not for me specifically, but you would be kind of abstracting away the fees of layer 1 there?
Yeah, so luckily we have treasury to do that, but essentially that's what we do. So if it takes 7 days to take some tokens back out from Polygon or so, then basically OTC we're able to trade certain tokens on different chains, on different layer 2s. The ZK rollups are probably interesting there because there's less of the centralization risk of the bridges.
Yeah, I'm really excited for those, especially the fully EVM ZK rollups. I know we have like, I guess DYDX is on Starknet, right?
It is, yeah.
And that's written in Cairo, so it's Turing complete, so you can run programs in it, but it's not EVM, totally EVM. What am I saying? Composable. You can't just drop a EVM smart contract in there and make it work. You kind of have to do some transpiling there, right?
Yeah, so
It's going to be interesting to see that space evolve for sure.
Yeah, we're quite optimistic about the ZK rollups.
Yeah, well, I guess you touched on another one there with optimism.
Yeah,
optimistic rollups.
Yeah, so we invested in, for full disclosure, we invested in pretty much all the ZK rollups, apart from Starkware that was already pretty expensive when we did it. When Eli was raising at 2 billion, he had 3 customers. It was like, okay, that's a bit. But they've done really well in between, and they've got a really good community. So we should have invested.
Yeah. I mean, it's a great project. I mean, I love DYDX, and they're built on they're using Starknet's rails there. So, yeah, I think they have a lot to offer.
It's really helped them because most of their funds were just going into gas fees before that.
Yeah, I mean, I remember DYDX back in 2019, like when US users could still use it. They I think they were subsidizing the gas fees. Like you didn't pay anything just because, ETH was $200 and gas was 8 gwei. It was just pennies for them. And now, I think when I finally withdrew everything from it was quite the haircut.
Yeah, we invested in 2 rounds actually after that. So in summer 2020.
Okay.
And I think early 2021, and it's very much before they moved to. Before they moved to Starkware in itself, they were literally subsidizing a lot of the gas fees, so their funding was just going into that.
Wow. Yeah. What do you see? What are the impacts of the bear market on the space? Maybe not just the price, maybe not how long it lasts, but do you see maybe a culling of the herd, to put it bluntly, or?
I mean, bear market as such is it's never pleasant because it makes it hard for teams to raise funds and so on. It's hard for anyone who's holding cryptos as such. On the other side, there's the silver lining is basically it's a lot less fluffy, so you just get a lot less scams as such and so on. You do get better quality around the teams of who's building in the space. Yeah, people are more incentivized long term. Less distraction. And I would say what's really interesting for anyone who may want to, so we as Wintermute, we're in a good position because we already dominate what we do, and we have runway for the next 50 years or so we can stay there. it's never pleasant in the way that we had shocks in the markets, like 3 hours and so on, where people would tend to put us in the same basket. Well, we're not in the same basket, but we just need to communicate more about what we do and how we're different. But
what about like the Terra Luna shock that kind of kicked off this bear market? What did that look like from Wintermute's point of view?
So luckily for us, because we are generally what's called market neutral, so we don't make money if the coins go up and down.
Okay.
So we didn't get impacted, and if anything, we made a small amount of money. So we make money by essentially volume driven. We're not price driven.
It's kind of 1 inch also.
Yeah.
Like the Dow Treasury, they get the revenue stream from the trading, and it's all-time high day that day going into the Dow Treasury, which was very cool to see. So
we made a small amount out of it. But and it's just good to clarify it, is that we've seen sadly that some competitors have had really long positions, so they were they owned a lot of Luna and Terra and so on, and they lost quite a good amount of money there. But we didn't. So we don't have it's not our purpose to hold a lot of long positions.
Has this changed your view on stablecoins at all? I don't know what it was before. Do you? I know Terra Luna was a algo stablecoin. Maybe you're looking at those a little differently compared to like collateral-backed stablecoins like USDC, DAI. Yeah. What's your take on this?
Yeah, we'll definitely prefer the collateralized stablecoins.
Yeah, that's how I'm feeling.
and there should be a better way to stress test the algo stablecoins before they get sort of too big, and because it's a bit of like the Terra Luna is a bit like it's a bit of a bit of a Lehman moment, if you want.
Yeah.
The good thing for the space is that if you think of Lehman, and I'm old enough to have traded during Lehman.
Okay.
Was that Lehman had like 56x leverage.
Lehman, can you just kind of say it for the general population? I think it kicked off kind of the great financial crisis, right?
Yeah. So
2008 or was that?
That was 15th of September 2008.
Okay.
So Monday morning, and then basically they had gone bust because they had too much debt.
Okay.
Versus the equity that they had way too much debt.
Okay, so if you have collateralized debt positions and then your collateral's worth less than the debt, you're in a lot of trouble,
exactly.
Right? Okay, so that's kind of what happened to them.
Exactly, and then you have a cascade of basically liquidations because of this. So you had a lot of people who were lending them money who also lose money.
And then the liquidations involve selling to the market, right, for the money. So that kind of drives down the price even further.
Exactly.
Wow.
So we're still going through that liquidation phase as such, where we're still trying to figure out. We know some of the large venture firms and so on who lost a good amount of money. I think it was probably 15 billion or so that disappeared.
Wow.
There. Now, venture firms they don't have leverage per se, so they don't really, they shouldn't really lose that much. There's another question of like, should they have taken some profits before? Probably, but at this stage we don't really see, we don't see nearly as much cascade in liquidations and so on, and sort of dislocations in the market than you would see in traditional finance. So I think this is the positive.
Oh, because we're fully collateralized in our positions?
Because it's fully collateralized, or at least it's like the net leverage, like in a venture fund is just one.
That's an important distinction to draw. Yeah. Okay. So I didn't even think about that one.
So you get less of this contamination risk.
Okay.
That you would definitely get in traditional finance. You don't really get it as much.
Because it was sad to see my portfolio half in a week, but I'm not leveraged, so it's just like kind of water off a duck's back. I didn't plan on selling that week anyway. But if I was leveraging up, I'd be underwater.
Yeah, definitely. So I think it's another segue to how the space could be in 3-4 years time or so, or how to approach the crypto winter. Is I think it's just better to look at it as a venture portfolio. So you just need to be quite diversified, and you need to let the winners run quite a lot when it works.
Okay.
And the background of it is I think there will be a nice reshuffle of the space. So I was saying we safe as Wintermute, as few of our competitors, because we have pretty decent treasury, and then we can see through many winters. But essentially I think it's a great time to actually build and start a new project.
Okay.
It's a bit harder to find new funds, but actually there's still a lot of funds that have closed billions to invest in.
It's kind of some silver lining here, right? If you can secure the funds, it's a great time to start a project because the market's already down. And then afterwards, we'll know who the winners are, you know, after the bear market, because it's easy to look like a winner in the bull market when really the project isn't that sustainable.
Yeah.
So
the other silver lining there is that many good teams will have fired a lot of good talent, and the good talent can actually come into and take a risk in a smaller team.
Yeah.
So it's easier to get some of the talent there. And the second aspect of the winter as such is that there's a whole midsection of like people who don't dominate a certain business case or a certain use case, and the midsection, they will have trouble. It will just be a lot more fluid. So it means if you're a smaller entrant, it's much more likely that you can get some market share and some presence in what you're doing. Just because some people may have overcommitted because they did well in 2021 and now they've got too many employees and they're more scrambling to deal with their own situation than
the
really
Icarus
trying
syndrome there.
Exactly.
Flew too close to the sun.
Yeah.
Cool.
So there's this reshuffling that's also happening. So you get better access to talent and then basically more fluid competitive landscape. So
I think that's a great note to end it on, just the positivity of everything. Yeah. So thank you so much, Yoann.
thank you.
Yeah.
Thank you.
Nice talking to you.
Take care. Thank you.